Gold is making headlines. Every week, a new record. But here's what the mainstream financial media keeps missing. Silver is the trade of this decade, and it could hit $200 an ounce before gold ever touches $10,000. I know that sounds like clickbait. Stay with me, because the math is simple, the supply data is real, and some of the biggest names in precious metals are already saying it out loud. Today we're breaking down 3 reasons why silver isn't just following gold, it's set up to outrun it. Let's start with where we actually are. The silver price was up over 189% year-on-year as of March 2026, and silver set its latest all-time high of $121.62 on January 29, 2026. Most people still think silver is a $30 metal. The repricing has already begun. Most investors just haven't noticed. Now here's the key ratio you need to understand. The gold to silver ratio tells you how many ounces of silver it takes to buy 1 ounce of gold. The ratio peaked above 105 around Liberation Day and has since come back down towards 70, suggesting increasing institutional investor confidence in silver. But historically, this ratio has averaged between 40 and 60. And here's the simple math behind our headline. If gold hits $10,000, a number serious analysts are openly debating, and the ratio normalizes to just 50, that puts silver at $200 per ounce. That's not a miracle scenario. That's mean reversion. Now let's talk about something the gold bugs don't even fully appreciate. Silver's supply problem is severe and structural. The physical market is expected to show a roughly 120 million ounce deficit in 2025. Marking the 5th consecutive year of negative market balance, with forecasts pointing to a continued deficit in 2026. 2026 is projected to be the 6th consecutive year of supply deficit, with demand exceeding supply by approximately 150 to 200 million ounces. Why can't supply respond? The challenge is that silver mine output is relatively unresponsive to price signals. As a byproduct of gold, copper and base metal mining, higher silver prices alone are often insufficient to trigger new supply. This inelasticity means deficits can persist far longer than in markets where primary production responds quickly. It gets worse. China's decision to tighten silver export controls from January 1, 2026 marks a significant shift in global commodity strategy. By placing silver under an approval-based export licensing regime, like rare earths, Beijing has effectively elevated it from a widely traded industrial metal to a strategic resource. And physical inventories? Record low physical inventory levels in COMEX and Shanghai vaults caused a shift from paper, silver to physical hoarding. The vaults are draining. New mines take 5 to 7 years to bring online. There is no cavalry coming. Now here's where it gets truly exciting, and where silver completely separates itself from gold. About 60% of annual silver consumption is tied to electronics, solar panels, and semiconductors. Electronics alone account for roughly 445 million ounces of silver demand per year, making it the largest industrial use of the metal. Solar is a monster. A single 500 megawatt solar park, sufficient to power a large data center, consumes roughly 300 tons of silver. AI data centers are now a major driver. These facilities require silver-plated copper connectors to minimize electrical resistance and prevent overheating in their massive power networks. And here's the critical insight that most investors miss. For manufacturers of solar energy, electric vehicles, AI and data centers, silver is essential but represents a relatively small share of total production costs. Running out of supply is not an option. They will pay. They have no choice. Industrial uses like solar, EVs, electronics, and AI hardware now make up over half of global silver demand. Solar alone is projected to consume more silver each year, pushing demand to new highs through the 2030s. This is not a monetary metal anymore. It's a technology metal with monetary properties. That's a completely different animal. Now stack all of that against the macro environment. Historically, silver has outperformed gold during easing cycles, as lower real yields tend to lift both investor allocation and industrial activity. Fed rate-cutting cycles have historically correlated with significant silver gains, 75% in 2001 to 2003, 80% in 2007 to 2008, and 140% in 2019 to 2020. What are the experts saying? JP Morgan projects silver could average $81 per ounce in 2026, more than double its 2025 average. Gold-silver analyst Alan Hibbard said he wouldn't be surprised to see silver increase by over $100 per ounce to $175 or higher in 2026. And First Majestic Silver CEO Keith Neumeyer has been on record saying he figures silver is going to reach $200 to $400 an ounce, at least, before this is all over. Silver ETF inflows reached around 130 million ounces in 2025, lifting total holdings to roughly 844 million ounces, an 18% increase. Institutional money is flowing in. When that investment demand collides with genuine physical scarcity, price discovery can move fast and far. Now let me be honest about the risks, because this is your money. Solar manufacturers are accelerating efforts to reduce silver intensity in photovoltaic modules. Silver demand from PV installations is expected to fall roughly 7% year-on-year in 2026, even as global solar capacity continues to expand by around 15%. Tech substitution is real, and it's happening. Major risks include unexpected Federal Reserve policy tightening, significant dollar strengthening, industrial recession reducing technology demand, and normal volatility corrections of 30 to 50% following recent sharp rallies. Silver is the most volatile precious metal. It can fall 40% as fast as it rises. This is not a set it and forget it investment. And nothing in this video is financial advice. Do your own research, talk to a professional. But zoom out. The structural story here is unlike any previous silver cycle. You have a permanent, deepening supply deficit. You have a replaceable industrial demand from the two most powerful economic forces on the planet, green energy and artificial intelligence. And you have a macro environment of rate cuts and dollar weakness historically associated with massive silver outperformance. Gold tells you there's a storm coming. Silver tells you the storm is already here, and it's industrial. If you think silver hits $200, drop a comment below. If you think it's hype, tell me why. Like and subscribe if you want to stay ahead of where the smart money is moving, and I'll see you in the next one.